Hello, Crypto Finder crew. My name is Cole. Today we're jumping in on 5 strategies that I like to use when trading crypto. There are many theories, mathematical equations, and strategies that try and make sense of a market that is largely speculative. However, most traders share one thing. They speak the same language of trading. This is also known as technical analysis. This means that actually there is a little bit of structure. So here are 5 that I like to use in my trading. Okay, let's jump in on the charts. Because I trade on a daily basis, I use a variety of chart timeframes, from a weekly chart, daily chart, 6-hour chart, and a 1-hour chart. For this example, let's use the 6-hour chart. Understanding where your resistance and support lines are is very, very important, because once they've broken through, it gives you a much better idea of where the market's going. As you can see here, I've drawn a red line. Now, if we look closely, we can see the candlesticks resisting and being supported by this line over here. It was also resisting here, tested it again here, it tested here, technically tested here, and then it became a support line, and it was being tested here, here, and here. Now, how can we use this support and resistance line to our advantage? Let's say the market is currently here, and we don't know what comes next. We've plotted our resistance line over here. Now we can also draw a support line by using the bottom of these candlesticks over here. We can see the market being supported by this line over here 1, 2, 3, 4, 5 times. Now that gives us a pretty good idea that the market potentially won't go below this line here. So if we go a bit forward in time, very importantly, you can see that the market actually closed below the line and had a whole candlestick below it, which if I was trading back then would probably freak me out, and I would imagine a much bigger drop coming. However, this turned out to be what we call a fake out. It did break out and then came straight back up past the support line that was generated over here over the last 5 times. And this is where we saw a market reversal. The market started going up, hit our top resistance line, tested it, came back down, tried to test it here again, and broke through. So then our resistance line then became our support line. You can see it over here, here, and here. Now, ever since we've been down here, the market's been in an uptrend. Okay, that's enough with the resistance and support lines. I hope that makes sense to you. If it doesn't, play around with some charts, plot some resistance and support lines, and it might start making sense. Let's move on to number 2. Number 2 is moving averages. Moving averages are a very important indicator for trading. So I use the 20-day moving average, 50 and 200-day moving average. Now, if we look at our graph here again, the green line here that you can see is my 20-day, the blue line is my 50-day, and the red line is my 200-day moving average. I've also set up my trading platform to show me crosses whenever these moving averages intersect. This gives me a good idea of any trend reversals or changes. So you can see here the green 20-day moving average crosses the 50-day moving average over here, and then crosses the 200-day moving average over here, which gives me a good idea that the market is going to reverse and go into an uptrend. As you can see, this is exactly what happened. The 20-day stayed above the blue line for an extended period of time up until over here. Once it crosses once, you've got a pretty good idea that the market is going to shift into a different direction. Usually, when it does cross, I normally exit my trade over here. Now, the market did go up a little bit and then dropped significantly. Now, if we look over here, from the top of here, to the bottom to down here, it was a 22% drop. Now, this is where I would have stayed out of the market and entered back down in here. Now, once we went through a bit of a consolidation phase over here, you can see the 20-day crossed the blue finally over here, and then it crossed the 200, as well as the 500 crossing the 200 over here. You can't trade just based off moving averages, because technically speaking, I could have entered the market back here when the 20-day moving average crossed the 50 here, but unfortunately it came crashing down again. And this is why I use several other indicators to give me a better idea of when to enter and exit markets. Now, jumping back into resistance lines and support lines very quickly, the market currently is breaking through a resistance line. So if I plot it over there, you can see the market hit it more or less there, 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 and there. So theoretically, what's happening right now is if the market candle closes above this resistance line, we're looking at an all-time high probably in the next few days. However, we'll jump into Fibonacci's a bit later so I can show you where it might actually take a bit more than a few days. Okay, so we've done resistance and support lines and moving averages. Now, the two of them in combination are very important. And oftentimes I'll go back to basics and use them as my guide. Right, let's jump in to number 3. Now, number 3 is my absolute favorite indicator, and that is the Fibonacci retracement line. It's quite complex to explain. I think practice makes perfect. You can obviously dig into this deeper if you have time. Now, the Fibonacci tool also gives me an indicator of support and resistance, which we mentioned in point number 1. Okay, let's draw a Fibonacci line using our all-time high back in April to the swing low, and you can see our 786 line and 618 line. I've drawn it out in a yellow corridor, and as you can see, the market has been resisting heavily on the 786 line. It tested the 786 line here by resisting and dropping here, and then it also tested it here by closing just above it or slightly below it. The market then went above the line and came crashing right back down to the line. So that's 4 days in a row it was resisting on the 786 line. And today, look at where we are. We're just about to hit $60,000 as we've broken out of the 786 line. Now, the Fibonacci retracement line also works in reversal. So if it's downtrending, you can use a swing low to a swing high. So let's say we saw the market reversing here. Instead of going through the 786 line today, it could have reversed and come back down. It could have resisted at the 618 line, but it also, if it crashed through, we would have expected it to then resist at this 618 line down here on the reversal. Now, what do I think is going to happen in the next few days using the Fibonacci retracement lines? Now, it's very possible that the market will either continue rising straight up, but because we have a resistance red line there, it's very possible that the market might come back down a little bit. Let me just expand this a little bit for you. We've currently plowed straight through the resistance line over here, but it's very possible that later through the day it might come back down and close below. If it does, we could see Bitcoin drop down to the 786 line over here, and then it might sort of fizzle down this way and then start going up. Now, the fib line here also gives us a rough idea on where we can expect Bitcoin to go. Now, this Fibonacci retracement line at the 1618 line is suggesting that the market could go as high as $87,000 before it starts resisting and coming down either for a bear run or just a temporary consolidation like we've just been through over here. So that's Fibonacci retracement in just a nutshell. If you want me to do more videos about how I use this tool in more detail, I'm more than happy to do so. Just let us know down in the comments below. Also, while we're at it, in the middle of the video, please don't forget to like this video if this has been helpful. I know we're plowing through these 5 different indicators quite quickly. I think each one of these tools deserves a 20 to 30 minute video alone just to really get into it. But I'm just sharing the ones I use, and if you find any of these interesting, do let me know. I'm happy to do a video in more detail on each one of them.
Number 4 is called Bollinger Bands.
Now, I'm not going to go into too much detail about Bollinger Bands and how they work, etc., because that's a whole separate video. I'm just going to share how I use this tool to my advantage to make decisions with their use. I predominantly use this tool to look for any volatility. So let's take a look. If we turn on Bollinger Bands here, I've got it already in a shortcut over there. You can see it's got the upper band, the middle line, which is a 20 moving average, and the bottom line. The top and bottom line are 3 standard deviations away from the 20 moving average in 2 words. Again, like I said, I'm not going to go into detail of how it works, but what I look out for is narrow corridors. So over here, you can see the corridor narrows down before an explosion upwards and a continuation going up. And then as you can see here, the market sort of calms down, calms down, calms down. The corridor narrows down. And then we're waiting, as the corridor narrows down, we're waiting for an explosion, and bang, you can see the volatility initiates here and goes downwards before it starts reversing. Now, I don't use Bollinger Bands to indicate which way a market's going necessarily. I use other indicators for that. However, in combination with Bollinger Bands and other indicators that we've already gone through, it gives you a pretty good idea of when volatility is coming. And I personally like to trade volatile times. I'm just going to show you another example. By the way, we're doing it on the 1 hour chart, not on the daily chart. Bollinger Bands I find are more effective on the short-term charts. So as you can see here, the corridor narrowed down for quite an extensive period of time. However, it did indicate that there was a big explosion of volatility incoming. And as you can see, bang, the market grew all the way up to there. It grew 15%. So that's a big, nice 15% jump. The volatility mainly happened here and just carried on through these few days. So that's Bollinger Bands in a nutshell and how I use them. Let's move on to the final fifth indicator, which I don't remember what it is. Oh, it's RSI. Indicator number 5 is RSI, Relative Strength Index. Now, this is a very useful tool. It's a tool I use to find when the market is oversold or overbought. It also gives me a good idea of when to exit a trade or enter a trade. Let's have a look at how it looks. So as you can see, I've got my RSI down here. Now this graph here, think of it this way, I've got my 50% line in the middle here. Once it hits the top of it here, it suggests that the market is majorly overbought, and as you guessed it, if it's at the bottom down here, it suggests it's oversold. Now it's pretty obvious, when the market's down here, let's say oversold, you can expect an influx of purchases, so market should go up. Now, as you can see, the market hit the very bottom line here, and as you can see here, the market reversed and shot straight back up, which we can see as a reference on the RSI line here. Now, because cryptocurrencies are quite volatile and strong at the moment in terms of their growth, you will find that a lot of the time the RSI line is above the 70 line, which is normally the cutoff line. We've seen it multiple times here, 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 and here. But that does not mean that the market's necessarily going to reverse into a dip. So as you can see, this strong bullish line over here represents this chart here. And on the RSI, you can see it started dropping down all the way down below 50. However, the market in reality was going sideways, so it wasn't necessarily dropping. And that's because of the way RSI is calculated. And for that reason, this particular example is a very good example. As you can see, the market was going sideways here, and let's say we weren't sure what would come next, this whole explosive bullish run here. We would have some uncertainty as to which way the market's going to go after you could see the Bollinger Bands narrowing down. However, because the RSI over here dropped down below or around the 50% mark, it gave us a pretty good idea that the market should start creeping back up. And this is exactly what happened over here. So a good purchase point would have been this moving average cross over here and use this whole run up. And again, in a nutshell, that is how I use RSI, just to give me an extra indicator as to where the market is in that time period, while relying and mainly using my 3 first indicators that we went through in the beginning of the video. So all in all, that is how I personally trade. If these indicators that I've summarized have been helpful, please do let me know in the comments if you'd like me to go into more detail on each one of them in a separate video. I wouldn't be sharing these indicators with you if they didn't bring me some level of success. I've so far 5x'd my investment by trading the market, not just hodling. This has happened in a fairly short space of time. I hope this video has been useful to you, and if it has, please do hit that like button. Show us your support that you've enjoyed the video and found it useful. Good luck with your trading. Take care. Bye-bye. No, that sounds like I'm on the TV. At this point, all I wish to say is good luck with your trading. Keep me updated on how you're doing and if these indicators I've shared with you have been helpful. Take care. Bye-bye.